Fine. Ed, it's Q&A time, and I can't wait for Q&A because I
It's
get to I get
it's
to learn so much from you.
it's Q&A time. Hopefully everybody will learn something, and it's not like we're dumping state secrets here. We're just talking about taxes and how to pay less. But who doesn't like that?
Ed, if we literally would tell people and we could just say, "Hey, share this podcast to everyone," anyone would want to learn how to pay less tax. I mean, I think it's the best thing that you're able to go in like any room and say, "I can help you pay less tax." What do they say to you?
It
No.
gets it
Yeah.
gets a lot of attention, especially with my fellow nerds. Tax law is nerdy. Nobody's going to deny that, but when people realize how the nerds put more money in their pockets, suddenly they're happy to be with the nerds.
All right. So
I'm still looking for that social success I never had in high school. Still searching for it at age 61, Neil.
you'll figure it out because you're going to figure out a tax to live longer. All right, next. So, all right. So that was I'll go with that one. All right. So, question one. I mean, first question from one of our listeners and viewers. Did you
Hmm.
ever feel guilty when you realize you're taking money out of the government's hands at a time when we're running such big deficits?
That's actually a great question. And I get it more often than people would think. And the easy answer is no, I don't feel guilty because I don't make the rules. But let's dig down a little deeper into this and talk about it. So, we've got this government and it spends $6 trillion a year and it takes trillions of dollars a year out of Americans' paychecks and out of their investments and out of their business earnings because somebody's got to pay for all of this government that we've got. Now, that raises a lot of questions. First question is, should we have as much government as we do? And that's what people invented politics for. And then people invented social media. They thought social media was where you were going to share pictures of your dog and your grandchildren. No, it's where people go to argue politics. That's a different question. So society, we've decided that this is the government that we're going to have. We got to pay for it, and taxes are the way we're going to pay for it. Do I think that the current federal tax system is the best, most efficient way to pay for government? No, absolutely not. If I were king for a day, I would replace the income tax system with some sort of a consumption tax. It would be a progressive consumption tax so that if you're buying a used Toyota, your sales tax wouldn't be as much as if you're buying a new Mercedes. You can have progressive sales taxes. You can have progressive real estate taxes. You can have progressive excise taxes. That's possible. But this is the system we have, and this is the system that Congress has put together for us. It's the system that the IRS is enforcing. Do I feel guilty if I help somebody pay less? No, because I'm helping them pay less by working with the system, not by working against the system. I have legal tax strategies. Everything that I do with my clients is court tested and IRS approved. I'm not helping clients cheat on their taxes the way some preparers do. Not many, but some people do that. So, what I'm doing is I am helping people follow the rules that Congress has set up. And it works to their benefit because they end up paying less tax. Now, I'm guessing from the tone of that question that it probably came from someone who is skeptical about the whole tax reduction mission, about the whole tax reduction field that I work in. But there's an implication that somehow government needs the money more than my clients or government deserves the money more than my clients. And I think most Americans who vote for the people who put together this ridiculous system would say no, that's not the case.
Yeah, and it's interesting when you talk about tax and what's fair and what's not fair, and look at all these things because at the end of the day, things could change anytime soon. So
Things,
basically, it could change very dramatically, and you're ready
yeah,
for it too if it could
yeah.
happen.
Well, things will typically change with a new presidential administration. Who knows what's going to happen in the 2028 elections? But if we start 29 with Democrats in charge of the White House, the Senate, and the House of Representatives, we can expect some pretty significant tax changes in 2029. And it'll be because we have a new set of legislators who are running things in Washington.
Interesting.
Change is inevitable. And actually, we're going to talk about that in one of the upcoming questions.
Okay. So you suggested I set up a C corporation to peel off some of the taxable income from my business. My CPA said he doesn't like that idea because he thinks corporate rates are going back up. What's your response to that?
So, corporate rates will go back up at some point, or they'll go down, or they won't change at all. Corporate rates will change. But this was this is a really surprising question because we shouldn't make financial decisions, tax decisions, based on what tax rates might look like down the road. Is President Trump going to sign legislation raising corporate tax rates? Probably not. That means there's no realistic possibility that those rates will go up until 2029 and probably not take effect until 2030. It's 2026 now, so why would we not take advantage of a corporate opportunity based on the rates where we are, even if it's only for 4 years? You know, things change and we need to be prepared for them. But years ago, 20 years ago, when I started Tax Coach software, I met a CPA from Maryland at a conference where we were exhibiting. And the CPA said, I don't recommend S corporations for my clients. I don't believe in them because I think Congress is going to shut that loophole pretty soon. Well, that was 20 years ago. Congress has not shut the S corporation loophole. Congress is not about to shut the S corporation loophole. Most of the legislators who started in business and are now in Congress ran S corporations. They're not going to cut their own throats that way. If they do, we'll figure something out. But here's a guy who said, I refuse to use a perfectly legal, legitimate tax strategy because I think it's going to change down the road. 20 years later, it hasn't changed. And I can't even imagine how many millions of dollars his clients may have overpaid in taxes they didn't have to pay because he thought something might change down the road. Yes, we want to take a long-term look at what we're doing. We want to make sure that we have solid tax strategies, and ideally, we'd love to be able to continue them for as long as possible. But even if as long as possible is only 3 or 4 years, why would we not take advantage of them for those 3 or 4 years? I mean, look at you, Neil. You run a podcast and you are a marketing consultant. What do we have? What do you deal with every day today that you didn't deal with 3 years ago, 4 years ago?
Oh, it's totally different.
It's
It's
totally
changed.
different. Just AI alone. AI alone. I used to ask ChatGPT to put together PowerPoint presentations for me, and it did a terrible job. It wasn't capable of doing it. But we now have the new version of ChatGPT that just came out. I took a white paper that I had put together for college athletes looking to pay less tax on name, image, and likeness income. I uploaded the white paper to ChatGPT and I said, turn this into a PowerPoint slide deck. And it took about 2.5 minutes to do. It was chunking along, and I wondered, wow, I've never seen ChatGPT take this long to do something before. And when I downloaded the PowerPoint presentation, it was presentation ready. I just passed it along to the person who had asked for it, who said, wow, this looks great. Technology changes, politics change, tax law will change. We need to be ready for the changes, but we want to take advantage of what we have now as long as we still have it. There's a new rule this year for meals and entertainment. They're 50% deductible again, like they used to be. After COVID, they were 100% deductible. Well, if you're doing a tax return for 2025, are you going to use the old limit? Yes, because the old limit's higher, even though it's changed.
Wow. Is that going to be a big deal for people?
Well, it's not, because most people don't deduct that much in terms of business meals and entertainment. It's gone back to the historical norm, which is 50%. When COVID came along, Congress raised the deduction to 100% because they wanted people to save restaurants. They wanted people eating at
Mm.
restaurants so that restaurants didn't all go out of business. But that was a temporary thing, so the rules changed. So we took advantage of the higher deduction. If an accountant had said in 2023, oh, this is a temporary COVID provision, I wouldn't deduct 100% of the meals, even though it's legal, because I think the deduction is going to go back down to 50%. That would have been ridiculous.
Yeah.
Would have been
Ed,
ridiculous.
do you have a crystal ball to know what's going to happen in the next 4 years in taxes?
If I had a crystal ball, I wouldn't be in the tax business. I would be reading the Wall Street Journal 4 years from today, and I'd be living on, well, I was going to say on a private island. I guess
So you have to build your own
private
time
islands have
machine.
a bad name now with Epstein, but I certainly wouldn't be working for a living if I had a crystal ball.
Or if you had a time machine, two things.
Right,
All right.
right. I just
So
need to get that flux capacitor.
I'm telling you, people are trying to create it now.
Hmm.
AI said they can create it now. Just kidding. All right, so let's go. But I did ask, create a time machine for me. It's a fun prompt, so ask it.
Interesting. I'll bet it is.
Yeah. All right. So this question is really great. You talk about a lot about tax planning for business owners.
Right.
I'm retired and live mainly on income from my investments along with my Social Security. How important is tax planning for someone like me?
It's probably just as important for you as it is for a business owner who comes to me for business tax planning. So every investment has some tax consequence. Even tax-free municipal bonds have a tax consequence, because if you're collecting Social Security, the non-taxable income from the bond gets added to something called provisional income to decide whether you pay tax on your Social Security. But if you're getting stock dividends, are they qualified dividends or are they non-qualified dividends? If you're earning interest from a money market mutual fund, is it a treasury fund where it's not subject to state taxes? Is it a municipal treasury fund? So you've got tax consequences for every investment. Now, the rule is, and I agree with the rule, make the investment decision first, then find the most tax efficient way to do it. So if you're a conservative investor and you want 40 or 50% of your assets in fixed income, great. That's the decision you need to make. Now that you've made that asset allocation decision, let's figure out how to do it efficiently. Should you be holding that fixed income investment in a taxable account, or should it be in a tax-free account if you have Roth accounts, or should it be in a tax-deferred account if you have traditional IRA assets? But for some, what I would also say to the questioner is there are three primary obstacles to investment success, regardless of whether you're looking to pay for your kids' college or a down payment on a house or retirement income. The first is market volatility. Markets go up and markets go down. I have a stock in my 401k. I bought it at about $8 a share. It went down to $2 a share. It's now back up above the $8. I held it all the way down. I held it on the ride back up. But that's an obstacle. If I were going to retire and I wanted to sell that stock for income, I sure wouldn't have wanted to do it when it was selling for $2.50 a share. So market volatility is the first obstacle, and there's a whole industry dedicated to helping investors get around the problem of market volatility with asset allocation or protected investments like life insurance. The second obstacle to investors is fees, costs and fees. So you can invest in an exchange traded fund from Vanguard that has essentially no expenses at all, or you can go into an expensive hedge fund where you're going to pay 2% of the assets under management as a base fee and give up 20% of your profits. That's the standard pricing model in the hedge fund industry. But whichever choice you make is going to affect your returns. And then finally, the third obstacle is taxes. You can't control market volatility. I don't know whether the market's going to go up tomorrow or down tomorrow. Neither do you, and anyone who says they can tell us is lying. But we can affect the taxes. If we're looking for an active trading strategy that's throwing off a lot of dividends, a lot of interest, we can put that in the 401k or the Roth IRA. If we have a long-term growth strategy with a stock that's not paying any dividends, we can hold it in a taxable account, and we can choose to borrow against it rather than sell it. So there are a lot of things you can do to control how much tax you pay on your investments. So even for somebody who's retired, who has heard the Lion's Share podcast, oh, he's talking about business owners again. He's talking about a CPA again. I'm retired. I do my taxes on TurboTax. Well, tax planning is important for you as well.
Interesting. Follow-up question on that. Do you see a lot of tax strategy that needs to be done for retirees?
Yeah, absolutely. Absolutely. So one thing that a lot of retirees don't realize they can do is if they have money in a 401k where they're making required minimum distributions, pulling the money out and paying tax on it, well, they can actually look at doing a Roth conversion, converting that IRA to a Roth IRA, which is tax-free. They'll have to pay some tax now on the conversion, but with proper planning, the tax they pay now may be a lot less than the tax they would pay if they were pulling the money down the road. And then the rest of it is just, okay, you want equity, let's find a tax efficient form of equity investment. You want fixed income? Well, maybe instead of paying tax on interest, we put your fixed income in a cash value life insurance policy where there is no tax on the income that you earn.
And you can convert that to a cash value life insurance policy as well.
Well, so you can convert an IRA into a Roth IRA. You can roll money out of an IRA into cash value life insurance. There are a lot more opportunities than most people realize.
Okay.
And cash value life insurance is taxed like a Roth IRA. So there are a lot of people who don't have a Roth IRA or who don't have qualified plan money. They'll never have a Roth IRA. But if they like that tax environment, cash value life insurance can give it to them. You know, there are a lot of very wealthy people who own life insurance who don't need the death benefit protection. If they get hit by a bus tomorrow, their family will be just fine. They do it because of the tax advantages, not because of the death benefit.
Okay. All right. So this is another very interesting question. And this one will probably have me chime in. And I think you
Okay?
knew that. All right. So I'm a
Absolutely.
CPA myself, and I've been listening to your podcast because I'm concerned about the future of my business. What happens when AI can do most of the work I'm doing now?
Oh, please do weigh in. I'm gonna want to hear what you have to say. This is a fascinating topic within the accounting community. So we've had artificial intelligence. You know, long people were talking about artificial intelligence long before the first commercial large language model was available. That was what, 3 years ago, 4 years ago when ChatGPT
Yeah.
first came out. People have been talking about that. They've been talking about robotic process innovation and looking at accounting and saying, okay, accounting is the sort of thing that really ought to lend itself to these technological improvements. Let technology do the work instead of people doing the work, and that promises job losses. The reality is a little more nuanced. So I'm going to tell a story about radiologists. I might have told this story previously on the Lion's Share podcast. Radiology is about recognizing patterns. You look at a scan and you see here's a break, here's a tumor, here is something that needs to be biopsied because we need to see if it's benign or malignant. You're looking at patterns. AI ought to be able to do that better than radiologists, and there were a lot of predictions that radiology would be the first specialty to wither away and die in AI. Well, there are just as many radiologists now as there were when AI first came out. It's changing what they do, but it's not eliminating them. And that I think is really crucial. Radiologists are spending more time with patients. They're spending less time doing the pattern recognition, and they're spending more time communicating the results to the patient. And that's what the patient really wants. I don't think a lot of patients want Dr. Robot. Now, Musk is working on Optimus, and Optimus will be able to do all sorts of things, but Optimus isn't going to have a bedside manner. So what we're seeing in the tax field is CPAs who are getting out of routine work like bookkeeping and tax preparation, and they're getting into more valuable work like CFO work, where you're really advising clients to make business decisions, or the tax planning that I do. Part time fractional CFO work, that is advanced accounting, tax planning is advanced tax work. So I think you want to be looking at tax work that won't be replaced by AI. And certainly my wealthy clients, they don't want robo advisors. They don't want to go to a website. They want an actual person at least managing these processes. But I want to hear what you have to say, because you've been a mentor to me in AI just in the time since we've been hosting these podcasts together. What do
And
you
it's
think as
so
a
so
guy?
so the first thing I would say is the progression that we thought we'd see in 2025 when we talked to now in early 2026. The progression is not much more. We're
Mm-hmm.
seeing a huge competitor. It's costing a lot more for AI. I would recommend anyone who's a tax person, any business, how can I not be replaced by AI? And start asking questions. Ask AI the questions. How can I become uh, irreplaceable? Because that's what we all have to do as human beings in the next 25 years. We
Mm-hmm.
need to address what skill sets AI can do that we don't bill our clients anymore. And what skills can we do now to offer that makes us far better than a lot of the companies who are just going to go to AI in
Yeah, and
marketing.
and
Yeah,
it's
yeah.
it's an opportunity. So every job has low value work and high value work. What you do in your marketing business, there's low value stuff that you have outsourced to technology. A large part of that is AI, but other technology, you've outsourced it. And the high value work is hosting podcasts, working with podcasters, helping them develop a marketing plan, a marketing philosophy, the stuff that I have no background in, no expertise in. I couldn't spell podcast a year ago if you didn't spot me the P, the O, and the D. So you have high value, low value work. I have high value, low value
Mm-hmm.
work. Number crunching is not high value work for me. Strategizing is high value work for me. Storytelling, communicating, teaching, that's the high value work. And that's what I like doing anyway. I don't like doing math for taxes. I went to law school because there was no math. So I can outsource that part of the work and become more productive. The PowerPoint presentation that I told you about
Yeah.
earlier in this episode, that would have taken me a couple of hours of my own time to create on my own. ChatGPT was a productivity tool that frees me up. Now, did I spend the 2 hours I saved napping? No. I'm spending that time with clients or finding new clients.
Right. And that's the power of what you need to do is how can I be the most knowledgeable in AI? And then look and ask AI how I can't be replaced. And that's the process of high value work. If you're working with your clients, more client facing time. If you
Mm-hmm.
don't like client facing, you're in trouble because
Well,
that's going to be a big, big part of your job if they want to keep a human. Because
right.
AI
Well,
is, you know,
and that's a good point, particularly within accounting, because there are a lot of people in the accounting field who are perfectly happy sitting in a cubicle crunching numbers all day long. They're the ones who have to worry about their jobs. If you're interfacing with people, you're going to be okay.
and you got to learn. The
Yeah.
learning tool that AI is amazing, but
Hmm.
also take five different choices Don't always go with the first thing that you hear, and see if it makes sense. And then also talk to a professional. So
Mhm.
if you're learning AI and saying, I'm got this is great, go to somebody that's much more knowledgeable in AI and ask them, is this really working? And that's
Mhm.
big. But I think that your job won't be replaced. What I've seen in AI in the last 6 months is telling me no job is going to be replaced, and the AI bubble is coming. And what's going to happen is people that spend all this money on automating, I got AI, are going to say, the buyer beware, and say, maybe I should go back to
Mhm.
some of my humans.
Yeah, I see a lot of speculation. I see reports that a lot of companies that have invested money in AI really aren't seeing the ROI that they were expecting. We talked about my crystal ball earlier. I don't have a crystal ball either, but if you ask me, I think that AI is in a bubble and we'll probably see a pretty significant retrenchment on the finances of it. The technology will continue to develop. That's not going to stop. But the financial bubble that has grown around AI will either slowly leak or pop. We have no idea what it'll do. The technology will advance, and then we've got the decision at the business level and at the society level, do we really want to do this? So AI can become big brother. But just because AI can open the door to a dystopian future doesn't mean that we have to walk through that door.
No.
That's going to be the real hard part. That's going to be the real discussion at a political level and at a cultural level. Just because AI can do something, do we want it to do something? And we're seeing that with other technologies as well. Mark Zuckerberg was testifying today in a trial about whether social media is harming people, particularly young people. And Australia has banned social media for people under, I believe, age 16.
Mm.
Spain is looking at cutting back. A lot of European countries are looking back, are investigating social media. Ireland just announced a pretty major investigation of Grok on the heels of France doing something similar a couple weeks ago. 2026, a lot of people, I think, a year ago might have said 2026 is the year when AI is going to gallop away from us. I see signs that 2026 may also be a year of reckoning.
Go back. You froze. Keep going.
Okay. Yeah, I see 2026 may be a year of reckoning. We'll see. And that's going to have implications for tax professionals and taxpayers, just like everybody else.
All right. We'll go to the last question. We could talk about another AI session, but I think we should have an AI workshop on how CPAs can become better at AI and learn more. That would be an interesting one. All right.
That
So the last question. How do you find new ways to help your clients pay less?
That is a great question because everybody is looking for the strategy that they've never heard of. And if they haven't done any tax planning before, I'm going to sound like a genius. And if they've done a lot of tax planning and I say, let's look at this, let's look at that, let's look at the other thing, and they say, I've already looked at this, I've heard of that, I've heard of the other thing, what more can you bring me? And mostly it is networking with other tax and financial professionals. So there are vendors who pop up with new strategies. Maybe they're tax advantaged investments, maybe they're strategies to defer income when you sell an asset. They start doing their marketing to financial advisors and CPAs. I'm often going to hear about them right up front. In some cases, they're going to come to me and other people in the tax reduction space first. But I work with my Taxmaster network of hundreds of CPAs across the country. I work with my Excel Empire network of hundreds of financial advisors across the country. And when they hear a new strategy, they bring it to me. I'm in a fortunate position that I don't have to go looking for those strategies. They get brought to me. But for anybody else who's in the business, keep your ears to the ground and keep your network as wide open as possible.
All right.
They're going to be the ones who bring the good strategies or the bad strategies. And some strategies really are in a gray area. There are some strategies that I feel comfortable with that other professionals don't. And there are strategies that I don't feel comfortable with other professionals do. That's what happens when you get into the gray area. and things that are not yet tested. I
So
think it's
do you think that how many strategies do you think there are out there for tax strategy right now in 2026?
Oh, there are hundreds. I mean, they're
Hundreds.
basic. There are hundreds. They're basic things like knowing what's the best way to calculate your mileage expense. Take a standard allowance or do the actual expense method. There are hundreds of tax deductions, credits, various strategies. There are at a higher level. When I sit down with a business owner who's making over $1 million, I will probably focus on a couple dozen of top level strategies. But again, I'm always looking for top level strategies. And then there are different ways you can implement a strategy. So there's a strategy called leveraged equipment leasing. Let's say I'm in California, I'm in the 50% tax bracket, I have $100,000 of income. If I don't do any planning, I'm going to send 50% of that $100,000 to Uncle Sam and the government of California. Now, I might be able to find a tiny house leasing deal where I pay $10,000 down and buy a tiny house for $100,000. I deduct the full $100,000. Now, I've eliminated $50,000 of tax and I've replaced that with a $10,000 down payment. I've put an extra $40,000 in my pocket. That's how leveraged equipment leasing works. Well, there's tiny house programs, there are airplane programs, there are buy a crane and lease it to a construction company programs. There are lots of different vendors marketing lots of different programs, but they all fit under that umbrella of leveraged equipment leasing. And some clients simply aren't going to feel comfortable leasing a crane. They might feel comfortable with a plane. They might feel comfortable with a tiny house. Um, it just depends on finding the right fit for the right client. So, at a high level, leveraged equipment leasing, leveraged charitable donations, solar energy credit programs. At a high level, there are going to be multiple programs for each of these concepts. And in a lot of cases, I'm going to find out about new programs from the advisors that I work with. They're going to come and they're going to say, hey, Ed, I know you like captive insurance. Have you heard of this alternative from this vendor or that vendor? Just
Hmm.
got to pay attention to what's going on in the world. And it gets back to that very first question, or to the second question we answered about change. You got to be ready for new programs. You got to be ready for programs to exit the marketplace. And you got to be ready for some programs to crash and burn.
Got it. And it might be the wrong program, and that's why you have to call Ed today.
That's
Appreciate
why
it,
you
Ed.
call
Yeah.
Ed today,
Yeah.
or somebody a lot like Ed, someone of my general height, weight, and fashionable choice in eyeglass frames.
All right. We appreciate it. Make sure you like and share this podcast. Tell everyone about it. Like the Lion Share podcast, write it an Apple Podcast review. Follow us on Spotify, everywhere, and tell people because honestly, you're getting some really great advice. Go for it. And Ed has a lot of people he can contact you into the best tax professionals. So appreciate it, Ed.
Thanks so much.
All right. That was a special simulcast of the Neil Haley Show and the Lion Share.